Okay, today is Tuesday, June 4th, 2024. I am, as I am every day, Jason Shapiro with Crowded Market Report. Today we're starting to hear now a lot of people getting back on the economy slowdown train, okay? And I think that they're pointing out things like, look how much crude oil is going down. That's a sign that, things are slowing, right? Look at bonds, look at how much bonds are going up. That's a sign that things are slowing, right? Look at the Russell, right, is going down again. That's a sign that things are slowing. And I'm here to say that's fine. I don't necessarily have an argument with that. And even if I did, it wouldn't matter. I did start pointing out a few weeks ago that I think that it's changed a little bit. Everyone gave up on the slowing thing, and I thought that there was going to be time now again for people to start thinking they were slowing. So here we are. People are starting to think that again. But what I'm here to say is if you want to trade that idea, then please trade the things, as you know I'm going to say, that are most crowded, because those are the things that, if this whole thing unwinds, are the ones that will give you the best risk reward. So where are the things that are most crowded? Well, we know I've been talking about the metals, gold, crowded, silver, crowded, copper, crowded. I personally think that copper is the single most consensus trade out there, and I've been saying that for a while. But there's two things you want to do. You want to trade the things that are most crowded. Okay. You also want to trade the things that are working. Then you're not fighting the tape. You're going with the two best things, which is massive crowdedness, which can give you great risk reward, and things that are already working, right? So you're not trying to be smart. And stocks, what I'm trying to say, are not the place. You look, this is the Dow. It's not really crowded. The S&P is not crowded. The NASDAQ is not crowded. And even the Russell is not crowded, okay? So you want to be where they are crowded. Where are they crowded? Copper, right, which is already working. Listen, copper's down 12% from the highs, The S&P is down less than 1.5% from the highs, all right? That's where you want to be with what's working. What else is crowded that could work in a slowdown situation? Well, look at the short end of the yield curve. This is the 5 years, okay? Right? That's the most crowded thing. And that's another one that's already working, okay? It's already bottomed, and look how quickly it's going up. And they're massively crowded short, as you see here, there. What else? Well, I've been talking about the currencies for quite a while. Swiss, very crowded. Look what the Swiss has done as bonds have gone down because the slowdown is coming. The Swiss has been a great beneficiary of that and should continue to be, if that's going to be what people are start thinking, because it's massively crowded, right? The yen, of course, which is traditionally a risk-off thing, is starting to work. Massively crowded. So these are the things, if you want to trade the slowdown coming, recession coming thing, these to me are the things to go with. Short the metals, buy these currencies, right? Buy the short end. I mean, the short end is the purest play for a slowdown, right? But the good news is it's also showing massive crowdedness. So that's the message I wanted to give today. Go with what's crowded and what's working. That's the best combination there is, right? Because that's where your best risk reward is going to come. Okay, so this is Jason Shapiro, Crowded Market Report, signing off. Please like the video if you like it. Always happy to answer any questions or hear any comments. Please check us out on crowdedmarketreport.com, where we talk about this and much, much more. All right, thank you. Have a good day, and we will talk again soon.